Hi guys, Contextlogic, ticker symbol is Wish, is trending everywhere and for good reason because the share price is about to take off to the moon. There's so many things that are happening right now that can act as major catalysts in taking this price off. So things like option order flow data, institutions buying this up, and then the Nscc 002 rule change. So in this video, I'm going to go through all of this. But before I get into it, make sure you guys subscribe and of course hit that notification bell. You know, all the good stuff that helps the channel out. And while you're at it, you can get 2 free stocks valued at $1,850. All you have to do is check out my Weibo link in the description box below. So for those who don't know, Contextlogic or Wish is an American online e-commerce platform that facilitates transactions between sellers and buyers. So if we pop over to the data on Finviz, as we can see, there's a short flow or short interest of 6.59%. So the average volume of shares being traded is 38.5 million shares, or the volume on the last session was 233.7 million shares being traded. So the last session's volume is a mad one still. There's a lot of people getting in on this stock. There's a lot of activity on this stock, and also seen as there's an increase in the short interest in this stock, meaning there's a lot more short sellers trying to short this stock. So the whole concept of short selling is if you believe the price of a stock is going to fall and you want to gain out of the decline of that price, you'd short sell. You borrow shares from someone else. So if the price of the stock falls and then effectively you buy back, so you buy to cover your shares, because you buy to cover those shares at a lower price, you effectively make a profit. But if the price starts increasing, right, then you're automatically at a loss, or you're also at a loss of shares that you don't own. Alright, shares that you've borrowed, and every day that passes, you're effectively accumulating interest. So see it as a loan, right? So you're taking a loan of shares of someone and you pay interest on that loan. So you're paying interest to the person who you borrowed the shares from. So the fact that the price is rising, you start to panic because not only are you running at a loss, but you're also paying interest on that loss, right? So you can imagine short sellers, they panic, and then when they panic, they also have to buy to cover. They can't hold those borrowed shares forever. Okay, just like a loan, you can't hold a loan forever. Eventually you have to pay back. So even if they're at a loss, they have to buy to cover. So as they buy to cover, this creates a lot of demand because of course they're buying back, so they're creating demand within that stock. And this is usually why the stock goes into a short squeeze. So basically when it goes to a short squeeze, there's a lot of demand coming in because a lot of short sellers are covering the shorts. Therefore the share price just takes off. I mean, you want an example of this, look at what's going on with AMC. So this could potentially happen with Wish because the short interest is increasing, right? And the price has been falling for some time, but the price is making a recovery at the moment. We'll go into the chart in a minute, but the price is making a recovery at the moment. So as the price is rising, or as the price continues to rise, guess what? The short sellers, that 6.5% of short sellers, they're going to have to buy to cover their shorts because they're sitting on borrowed shares at the moment. And once they all start buying to cover, guess what? The price of Wish is going to take off. So this leads me on to the Nscc 002. So this was published on 21st of June, so just a couple of days ago. With this, I want to point you guys to the final statements. Number 1, 002B and hereby is approved on an accelerated basis. So the reason I pointed you to the Nscc 002, so a lot of institutions, they're the ones short selling these stocks. So they're the ones that have to buy to cover, etc. And a lot of them do naked shorts. So what regulatory bodies such as the SEC would do is that they'll check in on these institutions every month. So what this new rule states is that the governing bodies are going to be checking on these institutions like every day or very frequently to say, have you got the cash? Because they see what's going on with AMC, they've seen what's going on with GameStop, and a lot of institutions have actually been going bankrupt or basically having to get bailed out, and nobody wants to be bailing you out, right? So by doing this, they actually know what's going on with the institution regularly. So a little bit more information about the 002 is that automates the margin call process when daily reports indicate a member is over leveraged. So imagine an institution short sells a stock, so they've got a heavy position in short selling. So when the share price starts rising again, they start panicking, they start looking for where to buy, how to cover the shares. And usually the SEC wouldn't know what's going on until a month later when they check up on them. So now they're able to check up on them daily. They'll be able to basically see what's going on a daily basis. And effectively, if they're on the wrong side of a trade, especially if they're being over leveraged, then they'll just get margin called straight away. So that way their losses don't accumulate and they obviously have to get bailed out. As the share price of Wish starts increasing, which it already is doing, and I believe it's going to continue doing, and I'm going to show you more data on why I believe it's going to continue doing. But as the share price increases, then that 6.5% of short sellers are going to have to start covering the shorts, and basically they're not going to have to wait till a month, or the SEC is not going to wait till a month to check up on them. It's going to be daily. So if they can't cover their shorts, if they don't have the capital to cover their shorts, shorts, guess what? They're gonna get margin called and they're gonna have to buy back their shares. And then guess what's happening? Holla at your boy. There's gonna be a huge demand, and the demand is gonna send the share price taking off. So looking at the option order flow for Wish, as we can see, there's 3 separate orders for the strike price of $5, expiring the 20th of August. The size is 250 contracts, and they're all sweep orders. So first of all, there's 3 separate huge core orders that's coming in from institutions, and these are sweep orders. So the dynamics of the stock market and the option market is, of course, for every buyer there has to be a seller. So it's all about demand and supply. And in particular with options market is that when you're buying options, you're buying contracts. So for every buyer of one contract, there has to be an equal seller of that one contract. So of course, institutions, they don't go and buy one contract, they buy hundreds of contracts, even thousands of contracts. So effectively, the order has to be routed through multiple channels. So with the sweep order, the institution is saying, look, just get me my 1,000 contracts, get me my 250 contracts, because something big is about to happen and I want to get in. I don't want that fear of missing out. I don't want none of that thing. Get me in now. So they don't care, right? They just want, basically they take lumps and then they sweep everything, every single contract they can get. They get it all in one. So the sweep order is actually a very aggressive strategy, and it's usually done by institutions because, again, they know something is about to happen and they usually want to get in early. So by them sweeping up all these core orders, is they're speculating that a huge bullish move is about to happen with Wish. Another thing I want to point you guys to is the analysts rating for Wish. 9 analysts are stating that this is a buy, 0 analysts are stating that this is a sell. So there's a lot of people believing that this price is going to take off to the moon. They've got a potential return of 35% and they've got a price target at $18.30. So not only are institutions getting in on the right side of this trade very early, analysts are also saying that this is a very good buy at the moment. So looking at the chart of Wish, and the price has been decreasing, but look, the price has made a very good comeback so far, and it broke above this 10-period moving average on very good volume. So the 10-period moving average is actually a very good momentum indicator. So basically, if it's above it, then you know the momentum is high to the bullish side, and if it's below it, the momentum is high to the bearish side. And when the price broke above the 10-period moving average, the bears tried to take control, and effectively the price came back down to test the 10-period moving average as a good support line. And since then, the price has just been hugging the moving average and effectively staying above it. The price recently broke out of a bull flag pattern. So the fact that it broke out this bull flag pattern, there's going to be there's currently a lot of bullish momentum that could potentially send this price to the moon. So the price at the moment looks like it's going to test this resistance. So this resistance used to be a support, and when the price broke below the support, effectively it became a potential resistance. And the fact that the price tested this potential resistance on the 28th of April and it effectively confirmed it as a resistance, the price continued falling, and then the price came back up to test it on the 9th of June more recently, and that's where we see the huge bearish candle. So what's really interesting is that the bulls are raising this price to test this resistance for a 3rd time. So I believe more than likely the price is going to break out of this resistance, and when it breaks out of the resistance, then I can see the price pretty much heading towards this other resistance at $20, which is pretty much in line with the analyst rating at $18.30. So those are the reasons why I believe the price of Wish is going to take off. And full disclosure, I actually got into Wish today. I mean, I saw the potential and I bought a lot of shares because guess what, man's wants is 10 days. So if you enjoyed this video, make sure you guys subscribe and of course hit that notification bell. In comment below, let me know your thoughts on Wish. Are you in Wish right now, or you thinking about getting in, or if you're currently already in or you just love the stock, make sure you guys smash that like button. Helps me out, helps the algorithm out, and of course helps the channel out, and also lets me know that this is the kind of content you guys want to see. Alexa, play me Ray J One Wish, because my one wish is to get a lot of 10 days from this bad boy. Thanks guys, I'll see you in the next video.